live. Okay. Hello, everybody. Welcome to Baku Power BI and the Modern Excel User Meetup Group's 21st session. So, Baku Power BI and Modern Excel User Meetup Group started to make meetup sessions as of April of current year. Till now, we have more than 700 members, and we're going to organize today 21st session. And also, for your information, I have organized or created a community group on Power BI community, which is called Azerbaijan Power BI Group. So if you are there, I will be very happy if you join to my Power BI group also on powerbi.microsoft.com. So my acquaintance with Liam Bastick happened in 2019 when I was attending Excel Olympics conference and master classes in Ljubljana, in Slovenia. So that event was organized by Kasper Kamenšek. I'm very happy, consider myself one of the happiest person all over the world that I had an opportunity to see these people in Ljubljana, like Liam Bastick, Kempas, Charles Williams, Matt Ellington, and others. When I saw that Liam Bastick is going to deliver a speech for Romanian meetup groups members, so I decided also to invite him. So I started correspondences with Liam Bastick, and later I learned that Liam Bastick was coming to Azerbaijan in next 2 years to attend Formula 1 races, which has been organized for 5 times in Baku, in my lovely city, if I'm not mistaken. So I'm waiting this day, his arrival, although it's a little bit long, but I strongly believe that I will have an opportunity to introduce him my culture, my city, and other things in Baku, in Azerbaijan. So welcome from now, Liam. And one more good news I would like to tell you is that we know Daniela Steinfeld, who is also from Australia, and I have translated her book, Financial Modeling in Excel for Dummies, from English into Azerbaijani language, and which is going to be printed on December 25th, which is good, and Azerbaijani users will have an opportunity to start a financial modeling in Excel in Azerbaijani language. So today's speaker is Liam Bastick. I hope he will give the necessary information about himself, but I would like to go on with our next speaker, who is Microsoft Azerbaijan representative, Kachay Mirzayev, and this session is also going to be happen on December 23rd. So I would like to thank you for your attendance. Enjoy the session and see you on December 23rd. Stage is yours. Let me stop sharing, and you may share your screen, please.
Thank you. 1 second. Don't worry, it's not death by PowerPoint. I'll put some slides up there. Hello, everybody, and sorry I am late. Yeah, well, it's early here, but I'm late in that we seem to have a mix-up over the meeting links, but we got here in the end. So all's well that ends well. So thank you very much. I'm sorry I can't talk too loudly, though, but I've got a few people around me that it's a little bit past their bedtime. So welcome. This session I'm going to talk about in a moment, but first I'm going to tell you who on earth I am. So as Ilgar actually said, my name is Liam Bastick. I'm originally from the United Kingdom. These days I'm usually in Australia, floating around at the moment. In terms of, I work for a company called SumProduct these days. I used to head up Ernst & Young's modelling team. And for my sins, I am what's called a Microsoft MVP, Most Valuable Professional, which I think most of you here know what that is, so I won't go on about that. People say that we're experts, but I see an X as a has-been and a spurt as a drip under pressure. I prefer to see myself more as a farmer, someone outstanding in the, oh, never mind. It's a joke. normally a bit louder than this. I'm sorry if I sound a bit quiet here. Apologies. So what I've been asked to do today is look at the importance of cash flow modelling, and I've taken a bit out of just a bit of background on me. I was one of the people that reviewed Daniel's book that Ilgar's just shown before. So you'll find my name on the back cover of that. My book's only been translated into Russian. I haven't got the English version of it, but I don't have the Australian one. I've written about 9 books now in Power BI and financial modelling, and one of them might not contain a joke, but I don't know which one it is. So let's get going in what I plan to do. And there are some Excel files which hopefully Ilgar has circulated around. I'm going to go through some of the key parts of cash flow modelling in the current environment. So this isn't meant to be a boring thing, and I'm conscious I seem to be sounding very monotonic. I'm just conscious I've got to keep my voice down here. So apologies. If you see me in the flesh, Ilgar will tell you I'm a lot more louder and more animated normally. And I'm just having to stay a little quiet. So the key thing here is that, let's be honest, cash flow is important. And it's like, well, duh, you've got me into this session to listen to that. Yeah. But what I'm trying to actually say is that focus is often on profit when people build spreadsheets. It's a case of if I sell 1 million widgets at $1 each, then I'll have $1 million worth of revenue coming in. But it's not as simple as that, because people don't pay on time, some people default, and we have these issues. And the last 2 years have not been fun for anybody, no matter where you are in the world. We've all had long lockdowns. I'm based in Melbourne in Australia. I'm not trying to say we have had it any worse than anyone else. I don't think we have. We've had it probably easier in some ways, but we do hold the record for the longest lockdown in the world, which is quite amazing. And I've actually had a total of 63 COVID tests now, which is, I want to see if I can get into the Guinness Book of Records for that. And all 63, by the way, I've tested negative. It's just my doctor made me do them. I'm not paranoid, in case anyone thinks I am. But what's this meant for business? This is meant for business that businesses have had to force new ways to reinvent themselves, and they've actually had to reassess in total. And cash has become really important. Government grants have been circulated around the world if you've been lucky enough to receive them. And the point is, it's a case of look at profit. We've had to refocus on cash. But most people, when they think about modelling, they'll think about profit. And as I say here, cash is queen. I'm not sure whether I can say that. I'm supposed to say cash is king or what it is, but cash is of paramount importance at the moment. And it should be very, very important in any case. And look, it's not just when things are going badly and you're struggling to see where your next dollar is coming from. It's even important in times of economic boom. And I'm going to start with just a little set the scene story here, first of all, just to understand why, before I go straight into the Excel stuff and go here, so why it is so important, is that over here in Australia, we are focusing more and more on renewable energy and trying to actually think of new ways of not destroying the ozone layer, which we seem to have done quite well here, and instead think of new ways to actually power ourselves up. And solar power is becoming one of the be-all and end-all power sources over here. And the government gives grants. So with this, what's happened is, even in this time, there's been a real boom, because what's happened is a lot of startup companies have set themselves up, imported cheap solar panels from overseas, and they've managed to get their solar panels on 180-day terms, so they don't have to pay for them for 6 months. And they think, excellent, let's go sell them to somebody, get the money in, then I can pay for them, and we get government grants. It's a no-risk business. So they've been ringing people up saying, do you realise for the price of about 3 to 10% of the cost of installing solar panels, you can have them installed, the government pays the rest? People said, hey, this is brilliant, let's do this and put this together. And so what happened is they got lots and lots of business, but it stopped. It didn't stop with them. Other companies saw this and went, oh, this is good, let's go on too. Now, little question for you here. The profit in the first year for one particular business that I got involved in was $3 million Australian dollars. In the second year, it was $6 million. In the third year, it was $84 million. Huge growth. This is what companies want. What do you think it was in the fourth year? The answer is 0. They've gone bust. And they focused on profit and not on cash. And just as badly as when people are struggling with lockdowns and can't get to the customers and are trying to reinvent new media to get in. It's just as important the other way. So this is something that should be there in mind, front and centre all the time. What actually happened was that they'd taken in all these sales. People had actually put down a little deposit, and they gone and got the actual solar panel, got it shipped over, and then they had to have it installed. But there's only so many licensed people out there. And what happened is they were charging more and more and more because they realized they were in demand. There weren't that many. And so the costs were going through the roof. Get it? I told you there'd be some jokes in here. And what was happening was they go to one solar paneling company and say, okay, how much can we do it for? I'll do it for $1,000. But then they get an offer of $1,500 from another and $2,000 from another because they're so desperate to get people up there. But then even when it had actually been done, it had to be inspected by government officials who are always, no matter where you are in the world, notoriously fast at anything, not. And they were getting further and further behind the delays, which meant that they weren't getting the government grants through, which meant that businesses were not getting their money, which meant they couldn't pay their suppliers, which meant even though the profits appeared to be really good because of the rules of revenue recognition, they were going bust. And this actually happened. So cash is important. And that's what I want to say as a key message as we get in here. Blah, 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 blah. Don't worry. So if we're building a financial model, we're putting something in, which is what I specialize in, a model is thought of being broken down into its constituent parts. And I put this up as a blurry arrow. And let me explain why I put it up as a blurry arrow. When you actually build a model of any sort, forecasting tool, whether you're doing P&L, balance sheet, cash flow, whatever, it's basically a means to an end. You're going in a particular direction with your business. You're trying to get to an end point. Hence the point at one end, hence a bit of the blur, because you're perhaps not quite sure where you're going, but it's a communication tool. You're trying to say what you're going to achieve, how you're going to get the money. So in terms of if you need to borrow money from banks or whatever. So again, cash is important, but it's blurry at the outside because you're never quite sure what should be in and what should be out of your model. So these are the things that we should be putting in. Now, this session is not all about financial models, but I want to set the scene and put it in context. So one of the first things I would say when you build your model is put your checks at the beginning so you know what's in, what's out, things aren't going to break over. People often do this as an afterthought. That's not when you should do it. You should actually do it at the beginning. But then what should you actually build? Well, if I ask most people what they build to start off with, and I'm not talking about front pages, table of contents, getting the styles right and all this stuff. I'm talking about the actual mechanics. We don't start off with interest and depreciation, do we? We start off with things like, where's our source of revenue coming from? What are our costs? And so on. So we'll have our cost of goods sold, we'll have our operating expenditure, we'll have our capital expenditure, etc. This is a big, big chunk of a model, and we will build this operationally, and we'll do our million sales at a million widgets at $1 each, and we'll think on an accruals basis. Everybody thinks like this. When you get paid each month, assuming you've got a job, if you get paid, you don't go out and spend all your money there and then. You think, oh, this has got to save me till the next month. You get it after tax, and you're thinking, right, we'll spend so much on rent or my mortgage. I've got to spend so much on food, heating, etc., etc. We're accruing the whole time. This is how we build our models. So we put this in. This then requires the key thing I'm wanting to talk about here, which is the working capital adjustments. How do you turn P&L numbers into cash flow numbers? You know, the days receivable, the days payable, how do we get them in? This is what I want to have a look at and show today. That's going to work for P&L in terms of for revenue, cost of goods sold and operating expenditure, but not so much for capital expenditure, where you do pay for your capital up front, but you actually show it in piecemeal form going through the P&L with depreciation. This all needs funding. So again, the importance of cash comes to the fore with debt, equity and the servicing thereof through dividends and interest. And then we have to pay tax on it, another big cash flow effect. This all puts through the financial statements, and then we have other key outputs like charts, dashboards, what if analysis, valuations, etc., etc., etc. So we're going to be focusing on the working capital adjustments here, but just wanted to put it in context. So if we're going to think about that, and I've got the three financial statements, and the one that people always build to begin with whenever I look at models, and I do a lot of model auditing as well as model building, we actually have the income statement. Now, the income statement is your summary of your revenues, your cost of goods sold, and your expenses after tax. So it's all about this accrued element. And this is how modelers tend to think. And it's for a period of time, all works good. People make sense of it and think, yeah. But Often the cash is thought of as a bit of a bolt-on, because then the next thing they think about building is the balance sheet. And the balance sheet, well, that's showing you the status of your assets and liabilities and equities, and showing the financial position at a point in time. And then and only then do you get round to the cash flow statement, which is where you're looking at the movements in cash. And often what modelers will do is they'll work it out from the income statement and the balance sheet, but perhaps they should be focusing on it a bit more about what's driving it and calculating it in different ways. So we show how changes in the income statement and the balance sheet items affect cash at bank, but that's sort of like the tail wagging the dog. Surely we should be looking, how's the cash generated? What's the key driver of cash, especially when businesses are struggling, especially when they've got less access to customers, and so on and so on. And we need to break it down into operating, investing, and financing. And normally I will go through here and say, okay, well, how do you get this model? How do you get this working? But let me explain one of the problems here that people go wrong and get things going through. Rhetorical question here, because I know there's quite a few of them, and congratulations, I mean, it's 728 members here. Brilliant. I'm really looking forward to coming to Azerbaijan at some point, as I've tried twice to get to Baku, and I will get there for the F1 at some point. And I'll be a lot louder than this too when I come. Trust me, and that's without up. With this in here, if I said to you, you're modelling interest expense, where does it go in the cash? Does it go in operating, investing, and financing? If you're thinking, I know all this, great. Just think to yourself now, where does interest expense go? Operating, investing, financing. This is where I get to pause, have a little sip of tea, and get me away from a minute. If you said operating, or to yourself, I'm afraid that's not the right answer. And if you said financing, that's not the right answer either. As you said, it can't possibly be investing. You'd be correct too. Interest expense is a P&L item, and putting it into the cash flow is wrong. And that's one of the points here. It's interest paid that goes into the cash flow statement, not interest expense. Anything that ends in D, I always say in English, I don't know how that all applies in your own language, but in terms of in English, ending in D is what goes to the cash flow. Cash received, cash paid, interest paid, tax paid, etc., etc. These are the things in here. The expense and revenue items go into the P&L, and if it ends in able, then it's a case of it's a balance sheet item. Accounts receivable, accounts payable, Liam's irritable. These are things that go in the balance sheet. Oh, maybe not the third thing. But what this does highlight is if you're thinking, actually, interest expense does go in my cash flow, what you're probably doing is you're starting off with a P&L item, which might be net profit after tax. You're adding back your non-cash items, such as interest expense, tax expense, depreciation, putting through movements in working capital, and then deducting interest paid and tax paid afterwards, making these sorts of adjustments. You say, you see it is in the cash. Well, no, because you're adding back the interest expense. That's my point. What you're also doing is, if you're actually reconciling it to the P&L, you're doing a cash flow approach known as the indirect approach. And I'm going to recommend to you that when you build financial models, there's an alternative approach that's better called the direct approach, which is when you start off with only in the operating section, it shows a different presentation, where it's the cash received, less the cash paid, less interest paid, and tax paid. Now, interest paid can go in financing, but for my examples, it's going to be in the top section. That's not by the by here. But do you see I'm modeling it in a different way? And I'll explain why that's important as we go through. So just quickly, the interest expense, you build it up, you go through and put something in here like this. I'm not going to teach you to suck eggs, you know all about this. I just want to set the scene. I'm conscious I want to get into the Excel stuff, and we started 10 or 15 minutes late. As I say, apologies, wrong link, blah, 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 don't get my homework, all those things. I'm here now. The income statement here, we always tend to model in this order. If you think about it when you build it, you say, yeah, I do. I build my revenue first, then I look at my costs, which would be my direct costs first, my cost of goods sold, then my operating expenditure, and so on. I'm going to say, if it ain't broke, don't fix it. That's fine to still model it that way. But how are we going to get it into our cash flow? The balance sheet, and we're just going to go here, is not really the best. Once we need that to put what we call Threeway integrated financial statements together, which I'll come to in a minute, it's going to be a summary of our assets, so our current assets, including cash, our liabilities, and our equity. Now, I'm using the International Financial Reporting Standard System here, and if you're falling asleep at this point, so am I. What I mean is I'm not doing US generally accepted accounting principles, US GAAP, because I'm not all about positives and negatives. I've tried to summarize it some way. So at the top, net assets is about what you control. At the bottom, it's about who owns what. It's about the ownership. But of course, what the key thing here is the cash flow statement. As I said, the operating, the investing, and the financing. What I want to look at, in particular, in the examples I'm going to show in a minute, is we're going to be looking at the direct method. So cash receipts, less cash payments, less interest paid, less tax paid, the things you can reconcile directly to your bank account, to the company's bank account, whatever. It's going to make it easier to understand. And the method I want to show you about building statements up will actually force you into this approach. And look, I've been building financial models for a third of a century. I'll finish one. I'm a bit slow. I'm never going to win the financial model world, a couple of things like that. And oh, sorry, I've just realized I've got this, because I've had to jump on here at the last minute, because I thought this was in Google Meets from the invitation I got. This is the only background I have for Zoom quickly. And I was lucky enough earlier this year to be the recipient of the Lifetime Achievement Award for Financial Modeling. And sorry, that was about the last time I was on this platform. So if you're wondering why I've got this behind me, I'm not something to do with Financial Modeling Institute, but supposedly I know something about financial modeling. We'll see. You can be the judge of that. I just realized I've got that background behind me. Now, investing and financing are other elements in here. And if I were doing a financial modeling course, I'd bore you all to death with that. But I'm not going to here. Our key focus here is the operating cash flow and then how it flows into the actual balance sheet. So cash is cash ultimately. You see, in the past, everyone just focused on the P&L and balance sheet. But then there were high-profile failures like Enron, like WorldCom and others where cash got embezzled. If you start moving money around, if you start changing your actual accounting definitions, as long as the auditors agree and shareholders vote on it, it's fine. It's a change of accounting policy, and that affects the P&L and the balance sheet. If it's actually cash flow bottom line, it's effective, that's called fraud and you go to jail. But it never used to be a primary financial statement. It used to be note 1 to the historic accounts, is what it was called. It's only in the last 30 years so it's had supposedly equal prominence. But still, us modelers see it as a secondary statement, where now more than ever, it's possibly the most important one. And periodicity is crucial. Let me show you again with my solar panel example. Back in about 2011, I'm an accountant by trade. You probably couldn't tell with the way my slant started to begin with. I got brought in as a troubleshooter and as an acting chief financial officer, CFO, to help a company out, a solar paneling company that was struggling for cash. This was when it was on its way out. And you could see over these months here, from October 2010 to January 2012, they got this prediction of how their cash was going to go. And they needed to get money from the bank to survive. And the view was taken after they fired the last CFO for getting them into this situation, that what's the amount of money they needed to borrow? And if you look at this, it looks like it's about $1 million as what is the largest trough in here. But that was looking at it on a monthly basis. If I looked at it on a weekly basis, it looked more like my dental x-ray. So on here, it looked like it was closer to 2 million because there were bigger drops in here which weren't picked up on the end dates of the month. Things were happening with worse situations in the middle of the month. But you can see it was just going to be a continuing thing. They were never going to get out of trouble. It was just a case it was going to be one crisis after another and just survive. What was in it for a bank to actually lend to them? And this is what happened. The bank chose not to, and the company went bust because they hadn't managed their cash when they had the high bids earlier on and could have done something about it. This was the point. So that's setting it here. Direct versus indirect. You can build all your models up. I just want to be clear here. I'm not trying to explain this diagram if you're trying to get your binoculars out to see what's going on. The top part of this is showing the direct and the indirect methods of cash flow from operating activities, 2 different ways of doing it. The point is they've got to be the same number, and you can still reconcile and put these numbers up. I'm not going to be reconciling to the indirect method here, but there are videos on our website, SumProduct.com, which show you how to do it. But I have to say, I want to show you how to get the cash flow up and running in the first place. And to link this all together, believe it or not, for the 3 financial statements, there's only 2 links you need to do. You need to actually link your net profit after tax into your retained earnings section of your total equity section, the bottom half of the balance sheet, and the cash flow statement, the final summary, the net increase or decrease in cash held, gets actually brought into the cash section of the current assets section, the net assets section of the balance sheet. It's All we need 2 links to get it to work, and that's what I'm going to show in a minute. Conceptual order, therefore, when you build it. Well, think about it. We're working our way down the P&L anyway. Let's start there. Let's build it up. Well, as we build everything, we actually have to make sure that we put in the corresponding entries for the balance sheet, so that it balances, but also the cash flow, which will need to be to get the balance sheet to balance, so we can focus on the cash. And therefore, you think, this is what I call the baby bear at the bunch. If I look at my Goldilocks analogy, this is what I'm talking about here. That this would be baby bear, because this has got the smallest number of considerations conceptually, because it just looks at the operating profit of the business. But then there's investing and financing, and that's where cash comes in. It's in the middle. And the reason the balance sheet is the biggest is because the other 2 link into it. And we've also got the point that there are things going on in the balance sheet which don't go anywhere else, like movements in reserves and movement from long-term to short-term assets and liabilities. To put those in. And if we build that checks at the beginning, as I mentioned before, that's what I call a 3-way integrated set of financial statements. If you're wondering about buzzword bingo and jargon, that's what it is. So that's what I'm talking about. Now, how do we achieve all this? Sorry, I've gone on a minute. It's not meant to be deaf. I'm going into Excel in a minute, I promise. I'm going to use this thing called control accounts, which is a great method, whether you're an accountant or not, to just simple modeler to build these 3-way integrated financial steps. And it makes it trivial. And I'm going to show you with an example and then show you alternative ways of doing the cash. So a control account is no more than a reconciliation of how a balance sheet item moves from one period to the next. So the example I'm going to give today is actually looking at sales and how this would work. So consider the following. If at the beginning of a period I'm owed $120,000, so somebody owed that would be my accounts receivable from the previous period. And accountants call that accounts receivable brought forward. Then I make further sales, $64,700. So if nothing else happens, I'm now owed $184,700. But then I get paid $82,750 in, which means I'm still owed at the end of the period $101,950. That's what it is. Now, the top and the bottom of this control account are balance sheet items. These would go in balance sheet. This is my debtors balance, accounts receivable balance. There's a current assets section right next to cash in my balance sheet. And it shows from one period to the next. So if I calculate it for one period, I can calculate it for the next just by copying across in my Excel formula. So that's just one calculation, top and bottom. The sales of P&L items, which I'll work through, and I might be widgets and how I'm going through and putting it in. And then cash receipts, I'm going to the cash flow statement, and I'll need to work that out based on some profile of how I'm going to go and calculate that. So I've got 3 calculations to do because my accounts receivable brought forward is just the previous period's carried forward. So that's not really a calculation. I just need to actually calculate my sales and put that in the P&L. I need to put my cash receipts as a positive number and put that in the cash flow statement. And I need to put my accounts receivable as a balance sheet in, and none of that equals open brackets one balance minus another balance, close brackets times minus one, stuff that I often see in balance sheets and financial models when people haven't seen tricks like this. So this is what I'm going to build. So assuming the last period's balance sheet accounts receivable number was 120,000, and I put that in, P&L sales figure 64.7. I put a cash receipt of a positive number of 82,750 in the cash flow statement, and I restate the receivables balance to 101,950. It has to balance, and that's the thing. And then I can go and analyze the cash to my heart's content. So what I want to look at is how to actually construct that cash by looking at the working capital adjustments. End of blurb on slides. Let's go look at something in Excel. Thank God for that. That was so boring. Right, let's go through. So I've got 2 files for you to play with. I've got this cash flows and control accounts examples file. You've got the finished one, and I've also got this other one, which is actually my working capital adjustments file, and I've got to start a file so I can build it up. So I'm going to be looking at both of these to show you what I've done, and you can follow along, or you can delete the formula, play it yourself. As I say, I'm conscious I've only got so much time, and people have different levels of modeling skill, and I just want to explain how it goes. So I'm going to turn my attention first of all to the cash flows and control accounts file. I'm going to start a file here to play with this. I'm going to have a look at what's in here. So I've got a whole load of assumptions that I'd have for a model. Now I'm not putting all these in here, I'm just showing you how it might work. So you can see in here, I've got my revenue and related calculations here, which include my sales and my working capital that I'm going to need. And I've got things for COGS, OPEX, and so on. And this comes from a larger course that we do. On the calculation sheet, we've got some stuff. This is where we're going to spend our time in a minute. So this is keep my input separate from my calculations. And then if I'm going to build statements, I need an opening balance sheet. And so I've got here what I would take from my chart of accounts. So I put this in this way: current assets, current liabilities, my equity, and I've got some checks down here to make sure there's no errors on the actual sheet, that it balances, which it does, and it's not insolvent. That is my net assets or my total equity, assuming they're equal. So clearly I've not put a check in though as to why this font isn't like this font. So let's just do that now. It's bugging me. Right. Got an income statement. But all I've done is I've put my chart of accounts together and put the subtotals in. So that if I put a number in here, gross profit will flow through to my earnings before interest, tax, depreciation, and amortization, known as EBITDA. They will throw it through after depreciation into earnings before interest and tax, into interest expense, and finally after tax, net profit after tax. And that flows through. Nice. I've also got a balance sheet here, which has got a couple of calculations in it. And this has got exactly the same line items on the same rows, keeping it nice and consistent as the actual balance sheet. Oh, and you may have noticed on every sheet, I've got this yellow X on a red background everywhere. You probably first thing you actually saw on any sheet, and I deliberately ignored it because it's an error. And this is highlighting something wrong. This is why you put your error checks in the beginning. Remember I said that? Put them at the beginning, then you know something's wrong. But at the end, when you're trying to solve everything in a crisis moment, do it at the beginning. What's happened here? My balance sheet doesn't balance my starting one, but more on that in a minute. I'll come back to that. And then I've got my cash flow statement at the end. And my cash flow statement is got my cash receipts, and I've got my cash payments, interest, and so on. And then you can reconcile it back to the indirect one later by just taking the numbers out of the financial statements at the end. Now, I'm not going to be building the whole model, so I'm putting this up, but you can use this as a template to get exactly the same number here. So that's the whole idea. So if I click on this here, I've actually created a hyperlink going through the whole model, and you can see I've got these 6 checks going on. In a model we normally build, we could have up to 800 checks in here. So what's going on? Well, if I click on this, it takes me to here, which is down here. This is my problem. My balance sheet doesn't balance, and that's because my net assets don't equal my total equity. And why is that? Well, what's happened is my opening retained profits is using a formula that if J9 equals 1, well, J9 is my counter, so if it's the first period, go to my opening balance sheet and go to I49, otherwise just take the previous period. So every other period, it just takes this value. So it's going here. So I'll put 8 in there, it will flow through. But for the first period, you see, if I put something in here, 8 or 9, it won't do anything, because in this particular one, it's going to the opening balance sheet, and it's picking up my closing retained profits of 245, which are what they are. Similarly, for this one, the 250 at the top, this is coming in from my other link. Remember I told you there were 2 links in here, which is my cash, which is using a similar formula. If it's the first period, if J9 equals 1, go to the opening balance sheet, cell I14. Well, opening balance sheet, cell I14, believe it or not, is the opening cash balance 250. Otherwise, if I go back into here, so go to the right one even, it's then saying, take the previous period and add on to it the cash flow statement, J37, which is the movement at the very end, this line here. So it's working correctly. The problem is the opening balances. Now, what's the issue here? Well, the opening balances all add up. My balance sheet on here balances. The reason it's not working is I haven't put all my opening balances in. So if I go through my balance sheet now and go for each line and put the opening balance into all of these lines, then it will balance. This is how people normally model. And this is where people get into trouble. They get what's going wrong and things like this, and it doesn't work. And we can get around this by saying, no, we'll do that. We're going to build it another way. And so, you know, I needed to come up with an alternative approach. So if you do it that way, you just hope and pray that it balances. Yeah, that's what most people do. Doesn't work out for them. Disregard it. The second option is to actually put all the actual opening balances in now. Just put them all through and it will balance. The problem with that is you don't know which lines are finished and which ones aren't, which can lead to errors of omission in here, and I don't recommend it either. If I tell you what the third option is, you'll probably know already what I think of this and why it's the best option. Cheat. If the whole point here is it's my opening balance sheet that's causing the problems, and I don't want to put my opening balances in, then let's remove the problem. Let's go to the opening balance sheet, and I'm going to shrink this down so you can see what I'm doing conceptually. So apologies for this. I've just made it all nice and tidy here. We're going to take this here. I'm going to copy it. Don't cut. Copy. Control C. And I'm going to move it 2 columns to the right. Don't want to drag it, but do it like this. And then I'm going to go back to this one here, and I'm going to clear all the data. Just go delete. So I've cleared it. Now, what's happened is I've got to an item. So stop. I'm trying to zoom in or something when actually I've made it big. I've now just put my helper column here where all my balances are, so I can copy these back in afterwards. At the moment, it now balances. And when we're a modeler, all we can be held responsible for is our movement in net assets equaling our movement in total equity. And we've now got that, so we can go on. It now balances, and now I can go through, build up what I want to build up. So to show you how to derive the cash flow and look at some key concepts, and I'm going to use revenue as my example. We're good to go now. The balance sheet, if I go back to the balance sheet in here now, it now balances because everything is zero for net assets and total equity. There you go. Magnifique. Let's go and have a look at our assumptions. In here, I've got some projected sales. I've got a unit price and a growth rate, and I've got my days receivable. So let's look at these in calculations. Do you see, it might be surprising, these values have all been brought in just as they are. And this is a great trick that I say. Often one of the problems that makes models indecipherable, too difficult to actually follow sometimes, is the issue that you get formulas that say equals assumption sheet J17 times calculation sheet D33 plus if scenario 1 equals J17, comma, then take the maximum of D15 and sheet 5 cell C63, and you think, oh my God, I need Jan Carl Peters' ref tree analyzer or something to follow this. Why not just bring all your inputs in? Just link them in. Just make them positive or negative as you need be, but just link them in, and that's what I've done. And I've coloured these 3 cells using a self style of internal reference here to actually say these have been brought from another sheet in case I print it out. And in case we're thinking where these are coming from, I've actually got a style guide sheet here, which actually explains that my colours aren't random. They actually mean that's an assumption cell, and I've got in here just internal reference, which means it comes from another sheet. It looks like this, so you understand. And the beauty is, if you don't like this colour scheme, you just go up to here, you right click on modify, and you change it to format. You say, actually, Liam, I want it to be a different one. I'm going to make my fill, I want to make it purple. I'm going to make my font bright yellow instead. That would look much better, I think, for this. I'll click OK, and OK again, and it will do that. And as I go to my calculation sheet, it's made it all purple in here. Oh, see, didn't use the style on this one. Naughty Liam, naughty Lee. Okay, let's control Z that quickly before anybody notices. Shh, shh. Joys of the live presentation. So first thing I need to do on here is work out my price per unit. I've got my units price, I've got my growth. This is nothing to do with cash flow, it's just working it out. But I wanted to highlight this because it's a common modeling mistake that gets made here. One of the things people do is they'll do this to start off with, and then they'll go in here and go equals this cell multiplied by 1 plus the growth rate. That's one thing I might do. If I use the formula text function, just to show you, so formula text, if you are aware of this, will actually show you what the formula is in that cell, and it will when I make it general. And copy that across, you can see that when there's nothing in there, it puts #NA, otherwise it's showing what the formula is. I've got 2 different formulas in here, and if I copy that across, it's going to go wrong because it's 2 different formulas. So you should have one consistent formula going across the row. This is one of the key concepts of best practice. The others being robustness, no errors, flexible, don't put any hard code in here, make sure you can change everything, and transparent, that you can follow it. And so often what I say is that use Liam's rule of thumb, which is no formula should be longer than your thumb. And just to that end, that book I was saying about before, the very first thing right at the beginning, I don't know if you can see this or not, let me stop sharing my screen for a minute. How do I get so I can just stop my stop sharing for a minute? So we get my screen up. I don't know if you can see this now. Can you see the rule of thumb in here? That no formula should be longer than your thumb. Don't want to put it too close to the camera because it will all go invisible. Let me share my screen again, but this is a key concept. A lot of people think, oh, you're an expert, so you write this really hideous on formulas. No, I won't. Keep it nice and simple. So rather than do it that way, what I'm going to do instead, let's just put it back to how it was, is I need to put an if statement in. I'll use that counter again. Now, one of the joys of having frozen pane and using Zoom, Teams, WebEx, GoToMeeting, all of those here, is if I were to click on this cell here when I'm doing a formula, so if I go like this, equals, and click on this, oh, it's doing it now. Sometimes it will highlight the whole column. So I'm going to actually type in J9 rather than actually write it. It's just the thing. So I'm going to put if open brackets. And I want to go J9 my counter here. So I'm going to put J$9 in. So it's what's done at that. So if that equals 1, so it's the first period. I want it to go to the 15. So I'm going to anchor this. So that's the F4 function key. So, yep. Otherwise, I want it to take the previous cell here, which will be I21, and multiply it by 1 plus the growth. Now, a common mistake people make at this point is they'll actually not click on this cell because there's nothing here. This is what this blue speckled thing means. These cells are deliberately left empty. If you've ever had an exam, sometimes I have exam papers and it say on one page, this page has been left blank intentionally. And it drives me mad because it should say this page has not been left blank intentionally because there's words on it. But this has been left blank intentionally. People don't click on this. They'll click on this percentage. Don't make this mistake. And then they might not close the brackets. And if they copy that across, what they'll always find is these last two cells will equal each other because this formula, make that general so you can see it, I'll just use custom here. And that's because this cell here is referencing 1 plus the growth rate of a blank cell. So watch out for that whenever you see an amount and growth rates method. This is one of the things to be careful of. This has to equal instead J90. So put that in, copy it across, and then you'll find these two values are not equal, which is what you want. And then my revenue is simply going to be equal to this multiplied by that. So what I'm going to just do is shrink this down slightly and use the formula text so you can see what the formula is. I put in the, so I'm just going to put in here equals formula text, this cell here, and I'm just going to put in, make it general, read it, and I've just customized it to go through. And also, if there is nothing in here, if error, I should say, if error, we'll just put nothing there instead. So we don't see any errors. And then we can just copy this down the entire page so you can see what it is. I'll put down to here. Blah, 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 blah. Right. So that's that stuff there. Now, what I've got is I've got my revenue calculations, and now I can concentrate on my working out my cash, and I've got my days receivable here. So to talk about this, sorry, I'm going to go back to the slides for a minute. Let's go back here and just talk about the working capital adjustments. So the definition of a working capital adjustment is its current assets less current liabilities, and it measures how much liquid assets a company has available to build its business. And the problem is this is all based on how many sales you make, how the timing it costs, and things like this. So it's organic, it gives you slow growth, and it will normally just be used in trade receivables, trade payables, and it's an inventory. And it can be positive or negative. That's how it goes. And it works on the working capital cycle that you raise purchase orders, you buy your raw materials, you do work on it, you have other production resources, you put it into finished goods, you then distribute it, sell it, get the money in on credit terms, find cash receipts. And all that time is the time it's taken that the cash is tied up. This is what you're trying to model out. So going back to my control account, let's put some nicer numbers in the first time. I had my accounts receivable at 0. So let's just say I had nothing to begin with, which is what I'm reflecting here. I've got an opening balance of 0. Make sales of $1,000 in here. So and then my cash receipts is 753 as a random number. Well, means there's no bad debts. I'm owed at the end $247. And I can show this pictorially. So let's do it pictorially. So assume I'm doing this over 365 days, a year, in other words. My cash is coming in evenly. So I've got it like this. Let's make a copy of that income statement. Thank you. See, look at that. My God, I've animated something. And then what I want to do is I'm going to convert this into a cash flow. So I'm going to push this along. So I get my cash flow statement, moving the numbers across, and therefore I have a credit period. And if I put some arrows in, you can see the sale that's made in one period, there's a bit of a delay before it comes in. So sale made at the very beginning, comes in at the beginning of the cash flow statement period, at the end of the cash period, and so on. And you can see how it puts it together. So if I fill this in with the numbers from the control account shown on the right hand side, I've got $1,000 coming in, let's say evenly over the period. $753 of that is brought in during the period, and therefore the remaining $247 is after the period. Now that clearly from the pictorial view here is the same as the credit period. So I can work out what my credit period is, assuming even cash flow, 247 thousandths of 365. And that's really all there is to it. So my days receivable, this formula is my accounts receivable multiplied by my days in period divided by the sales in period. Now, some common mistakes here. People assume all sales are credit sales. You should only have the credit sales in this calculation. The ones that are received as cash should be removed before you do the calculation. Otherwise, if I've got, if my actual cash sales, let's say I have cash sales coming in on a 28-day basis, and I have $100,000 of sales, what's going to happen is, if it all gets paid at the beginning, on 28 days, I'll have nothing till the end. But if half of it comes in straight away because there's no credit sales, then I'll have 50,000 right up to the end, and then I'll get the other 50,000. So just be aware of this, about how to actually work it out. Just put it down. The other thing people do is the days in period, they always put 365. No, it's however many days you're modeling it. So if it's monthly, it's going to be somewhere between 28 and 31. If it's weekly, it's going to be 7, and so on. So be aware of that. Rearranging this calculation, as I say, 247 over 1,000 times 365 is 90 days. And we can rearrange the formula so that our accounts receivable, which is the formula that we use here, is our sales in period divided by our days in period, multiplied by our days receivable, gives us our accounts receivable. Now, there is a problem with this. And I think the easiest way to show this is with the other Excel workbook I've got. So if I go to this second one, the working capital adjustments one, if you've got this to hand, I've actually got my simple example, this particular chart here, where I can choose to change it to debtor or creditor. It's the same idea. And I've noticed here, I'm getting some strange things coming up in the latest beta version with Windows 11 here. It doesn't normally look like this. It's supposed to be a scroll bar here, but for some reason it's looking a bit weird. I've got 90 days receivable, sales in period 1,000, giving me the same thing. And if I make this, for instance, 120 days, you can see, look at that, the chart moves. 180 days, clever, isn't it, my little chart? So it's different ones that can move it around. Now, I'm making it that it's 365 days in the year. Let's assume my days receivable is 90, but I'm modeling monthly. I'm going to put 30 here. If I press enter at this point, do you see what happens when I put that in days in the year? It's my calculation, if this were to actually work, I don't know why this isn't working, would be days in year. If I go back to here, my closing debtors is going to be, rather than if days in year, I'm going to make it if this cell instead, I22, take this and make it this formula instead. I'd actually get this. If my sales in a period are 1,000, but according to my calculation, it's going to be 1,000 times 90 over 30 will be what's owed to me at the end of the month under that formula. Well, 90 over 30 is 3, so I end up being owed 3,000. So I've become a loan shark company. So clearly this formula doesn't work when this number is less than or strictly less than this number. So we've got to think of another way. Now I'm going to explore that in a few minutes. But first of all, I just wanted to highlight that this can only be used in certain circumstances. If you're building annual models, then it's usually fine to do it this way. So that was what I wanted to show you. Let's go and put that calculation back into here. So I've got my days receivable. So the next thing I need to do is put my days in period calculation in here. And the days in period, well, I've got that in already, so I'm just going to copy that in. And that would be the way to do it, just 366. But a lot of people will actually do it as equal to end date minus start date, so that's J7 minus J6. Now, if you do that, be careful, because that's not right when you put those in. That will give you 365, and there's a reason that I started with a leap year. That should be 366, because you're subtracting off the first day of the period. So just watch out if you do it that way. So I'm going to use the J8 instead. And then to actually do my calculation of what my closing receivables is going to be, it's nice and simple. I'm just simply going to go, okay, don't need to do any of this. It's going to be my revenue multiplied by my days receivable divided by my number of days in period. Copy that across. And that's going to give me my closing receivables answer. And now I can put this into my control account. So my opening receivables from my model, I go equals here, and I go back to my opening balance sheet, and my receivables is going to be this line here. I'll just make that absolute. That's in here. To get my opening receivables from this line, it's just going to be this one copied across each period. Nice and simple. See, no formula long. They're all nice and simple here. My revenue, I've already calculated, is this line here, copying that across. And my closing receivables, this line here, is actually based on this. So I'm going to put this in here equals 508 and do it that way so I can copy it backwards and forwards nice and simply without having to do Alt ESX for the borders. And therefore my cash receipts is just a balancing figure. So it's just going to equal this number here minus the sum of the two lines above it. So that's generating my cash flow all through this wonderful control account. And this now gives me the things I need to put into my financial statement so it to work, because it balances. If I put this line in into the income statement, if I put this line in into the cash flow statement as a positive number, and I put this line into the balance sheet, it's got to balance. So a control account tells me three wonderful things. One, it tells me how many calculations I need to do in order to get my balance sheet to balance. And that is going to be one less than the number of rows, which here is 4 rows. So I'm going to have 3 calculations. Secondly, it tells me the order to do them. If I have no revenue, I'll have no cash receipts. And if I have no revenue, no cash receipts, I'll have no receivables. So I have to do my revenue first, then my cash receipts, then my closing receivables. And it also tells me where my what if analysis starts and ends. The thing I need to sensitize is the revenue, because if I do that, it will flow through to the others. So even if I'm really bothered about the cash flow, I'm going to be thinking about flexing my revenue calculations and also my days receivable. That's what I would look at. So let's put these things into to balance to show you finish it off. So first of all, into the income statement, the revenue. I just go here and go equals and always link to the control account. So I'm going to go back in here, click on this and copy it across. As soon as I do that, the error check says it's not working. That's exactly what I want at this point. I want it not to be working, because otherwise, if it said it was fine, I know my links won't work. So I'm expecting it to fail. That is correct. I'll copy it across. Great. Now I go to my cash flow statement and I put my cash flow number as a minus number because it's got to be positive. So it equals minus to negate the effect. In here, take this number. Now, most of the time, most of us are used to the fact that as soon as we do one calculation and then do another, balance sheet should balance. But when I do this, it won't, because I need 3 calculations to get it to work. Great. So let's now go to the balance sheet, put the third one in, and often we put horror calculations in, but we don't need more. We just go equals, back to the calculations, click on this cell, copy it across, and start cheering because the balance sheet balances. Everything is fine. How about that? Wonderful use of direct cash flow. I had to use the direct one because I was doing cash receipts. Yeah, it can't do the indirect one here. And I've actually got the whole thing working. Pretty cool, eh? Now, if there are questions coming up in the chat, I'll just have a look at it, but there are things in here going through. It might be, you like the error check. I'm just going through. Sorry, I've only got the one screen going at this time of day because of where I am today. I'll look at the chat from time to time. So I will be back at that later if there's any questions. I will be taking questions at the end. I forgot to mention that. So that's how we put it together. It's that easy to build the cash flow when the days in period is greater than the days receivable or payable. And just to show you how simple this is, just as a quick aside, let's just look. You haven't got this, but I just want to show this very, very quickly. That's as far as your example goes. I've got the cost of goods sold here. I've got some ideas about margin if I exclude inventory, which I'm not modeling here. And I've got days payables for similar idea. Let's just put these calculations down here. So you've not got this, but I just want to show. If I put revenue in here, so I'll bring my revenue in from up here. So there's my revenue calculated here. And there's a blue box here. And the reason I put this blue box is I'm going to use a formula equals row each box. And I'm going to use the row function to actually link to where the revenue is, which is up here in this cell. And that gives me the effect in here. This is row 23, so that people can see where this has come from. So just a simple thing. Now the gross margin is using another of these formats here. So I'm going to steal that format and put that in here. And that's going to equal, if I go back to my assumptions, the 70% brought in. So that's linking to another sheet, which is why I put that style in. And then if I take my gross profit, well, it's simply going to equal that multiplied by this. Again, nice, simple formulas. Nothing to do here. Right? I'll just style it so it puts the thousand separator in, those things nicely here. My cost of goods sold then is simply going to equal this minus that. Just stepping it out, transparency going through. And now I can do my calculations. I've got to do all the things, the days payable, days in period, and so on. So for days payable, I'm going to steal this in here. I'll just go copy. It's the wrong value, but it's going to give me all the right formatting. I'll just make that instead equals. Go back to my assumptions. There it is, days payable, 90. And then I've got to do the rest of my calculations, days in period, closing payables, control account. One of the things I said, make your models consistent. If you make it consistent, you can do this. Why don't I just go and take all that? Control C, go to days in period, go paste. All I've got to do now is change that closing payables to be the thing in the opening balance sheet, which is here, accounts payable there, make that absolute. I've done it. I've done the calculations all in one go. So it's a quick aside, but you see how simple it is. It's going to be simple if I can do it, because especially at this time of day, I'm going through, it's nice and easy and simple to flow through. So you can see how it is. And it's another control account, got 4 lines, so I have 3 calculations to put in. Let's go do it. So my cost of goods sold should be a negative number in the income statement. My cash payments will be negative already in a direct cost here in the cash flow statement, and that will go in the balance sheet. I do that little balance. So again, 3 calculations. The order to do it is put the cost of goods sold into the income statement as a negative number, cash payments into the cash flow statement, and then this into the balance sheet. I have no COGS, then I'll have no cash payments. If I have no COGS, no cash payments, I have no closing payables. So model this first, then that, then this. This is going to be my key driver for sensitivity. It's the beauty of control accounts. Let's do it quickly. So cost of goods sold into the income statement as a negative number equals minus. Back to my calculations here. Click on this cell, copy it across. Done. P&L, but everybody's always happy with bills first of all. Right. But now we go to the important of the cash flow statement. In here, my direct cash payment already negative, so just go equals. I'm directly linked to this cell, and it doesn't balance still because remember there's 3 calculations. It's the one thing the control account explains why it's not balancing it. So we need 3 calculations to be done. And the third one's the balance sheet into the accounts payable, link here, back to the calculation sheet, click on this number. It's as simple as that. As soon as I copy across, it's time to go running. I go, yay, I am a modeling god. And off you go. Sorry, I'd normally be a lot louder, but I don't want to wake other people up here. Hopefully you can all. Isn't that cool, eh? Now, I'll just break for a minute before I go on to the next bit. Has anybody got any questions? Let's have a look. I might just go in here and just have a quick look at the chat and see. I know we've got nothing from this, so hopefully it's all fine. So what I wanted to address is I'm going to come out of that file now. And I'm going to go and look at this one. So that was the simple example, and that works fine when the days payable is, or days receivable is less than or equal to the number of days in the period. So what happens when it isn't? What do you do then? So I want to finish with 2 other examples as to how to get through. One is this monthly count example, and again, I'm going to build this quickly from scratch and just explain what's actually goes on here, so you can have a look. So my required for calculations, what number? This isn't a formula. This is actually a constant, and the reason I've made it like this is to actually highlight the fact this is something that's just going to be not a variable. So it's average days in months. So I can go equals average days in month. There's a formula. More circulars in here. Can't do it because this is the cell for it. So don't do things like that. Oops. So it's 30. That's going to be my number here. Now, to work out my actual calculations in here, I actually want to work out, you know, if I've got days receivable, days payable, how many complete months I've got, how many partial months. This is what's going to be needed. So in this case, my days receivable is going to be greater than this. So I can't use this method on this page because it will give me my loan sharp numbers. So what do I do here? This is one approach. So what I can do is say, right, what's the complete number of months? Well, I could do that by just going equals int, the integer part of this number here, divided by that number. And that's fine, that will work. And I'll just put over here from the text so you can see what I've done. But what happens if I make that blank? Accidentally, I get an error. So what I might do is I might just put an if check in here saying, okay, if open brackets, just click on this cell here, comma, and at the end, put a comma. Is that what you need to do? Yes, because every number in Excel other than 0 is true as far as Excel's concerned. So a little cheat. So my partial month is then going to be, well, there's lots of different ways of doing it. The actual final one does it a different way. I'm going to just simply do this equals. There's plenty of ways of doing it. If you want to divide something by another, there's a mod function. Mod, if I go mod open brackets 7 divided by 5, gives me 1, remainder 2. Mod gives me 2. If I do mod 17, 16, it takes 17 divided by 16 and have remainder 1. That's what's going on. But one of the beauties of this is if I actually go equals mod open brackets of 1.34, 1, that gives me 1.34 divided by 1, which is 1, remainder 0.34. So it gives me the remainder. I'm going to use that trick to actually do my other bits, the formula. So again, I'm going to do my check. So equals if this cell isn't 0, then we'll have to calculate it. But I'm going to use the mod function. I'm going to take mod of this number here. And that's going to be on the average days in the month. Take that and divide it by the average days in the month. I always do that. Average days in the month. So otherwise it's 0, close brackets. That works. That gives me 50%. So if I put 40 in here, I get 1 remainder 33%. If I put 70 in here, I get 2 remainder 33%, and 75 gives me 2 remainder 50%. All good. Right. So then I need to do my control account down here. So let's put some numbers in first. For my sales in period, I'll just have it as 100, 200, copied across. That's just my inputs going through. Nice and easy. My formula then is going to be, my opening debtors is going to be, if it's the first period, I'm going to take 0, which is going to be this number. Otherwise, it's going to be the previous period. And so there's lots of different ways I can go through this. I'm just going to, because this is blank anyway, I'm going to keep it simpler than the actual formula that's in here and just go equals this cell and copy it across. So that's essentially what it is. That's also going to be blank. The actual calculation at the bottom is the hard one. Cash receipts is going to be as it was before. It's going to be this number here minus the sum of the two numbers above. A lot of people focus on actually calculating cash receipts. I always think it's easier to calculate your closing debtors or payables and then work out the differences in between. You find the things are simpler, and I do that deliberately. So now what I need to do is actually come up with my calculation as to where I'm actually going to make my construct. And to do this, I'm going to use a function called offset. So I'm just going to go off as a tangent here and talk about the offset function quickly. So I'm just going to put a little grid of the numbers 1 to 36 together in a little box. I may have it bigger. There we go, I've got the numbers 1 to 36. If I do equals offset here, you will see at the top if I zoom in on this. Now, I don't know on your version whether that's zooming in or not, but I've got offset references, rows, columns, height and width. The last two arguments are optional, and I'd rather it said depth than height to be what I want it to be. So I'm going to start off with this cell here, and I'm going to go down comma 2, comma 3. And that means starting cell A1, I go down 2 rows, go across 3 columns. If I do that, I get 16. Just formula text it. So what it's in here. So it goes, starts here, goes down 2 rows, 1, 2, and across 3. 2, 3. Great. That's one use of offset. I like that. It's volatile function, but it calculates quite quickly. Why is it volatile? Well, if I go here, click on formulas and hit trace dependence, that clearly is in here. But this 16 here, if I click trace dependence, apparently it's not referencing it. It fools the audit engine of Excel. And as a result, Excel gets paranoid and just keeps recalculating everything, which means when you have offset formulas in there, they will recalculate all the time. Now, there are companies out there like PwC that say, therefore, stay away from the offset function. I disagree, because offset's actually a lot faster than a lot of other counterparts. Wynne Hopkins and their MVP recommends you replace all offsets with index. Sorry, I don't agree with that. We've got some war stories. Yes, it may not be volatile, but let's be honest, we all use volatile functions all the day, all the time. Did you know VLOOKUP, it's volatile. If you change values in between the column you're using and the column you're referencing, it will recalculate. That's volatility. So don't go on your high and mighty horse, but I'm not going to use volatile functions, because you do. The fact is that just because something's volatile, it may calculate instantly. You see, an index function has to go and search for something and then return. And that takes time. Offset, you just tell it where to go. So it doesn't take time. It doesn't take that long. Yes, it might calculate all the time, but it just, yeah, go there. Okay, I'm there, boss. Now what? Whereas an index says, right, go find this. It's different. So, you know, just be aware. And we actually had a 700 megabyte model, and we noticed offset was everywhere. It was taking about 9 seconds to calculate. So, oh, that's terrible. We need to replace it all. And we did. We put indexes in, and it took 3 minutes 40 to calculate. This is a true story. You know, it's a case of my colleague Tim Hango, I work with, is another MVP. He was always against it, but after he saw that, he realised just because it calculates all the time, it isn't necessarily a bad thing if you've got no other option. Obviously, you want something that doesn't calculate all the time, but calculates quickly. That's obviously, but if it's a balancing act between the two, then offset isn't really a bad boy. And it's got some beautiful things in it that I'm going to show. One of the things in here is I can say, right, if I go comma 2, and you've got dynamic erasing, which I have in mind, it says, right, now I'm in the value of 16 in cell D3, I would have a depth of 2, which would be this row and the row beneath it, so I'll put the 16 and the 22, and have a width of 2, which would be this column and the column to the right. So all positive numbers are like reading in English, left to right and down the page. It's the same, so it's going to be 16, 17, 22, and 23. Bang. Now, if you haven't got dynamic arrays in your version, you'll get hash value at this point. And that's fine too. Doesn't matter. You don't need to have this. It's just great for showing the concept, because all you really need to do is be able to sum it. If I can sum that, well, 16 plus 17 is 33, plus 22 is 55, plus 23 is 78. And that's the sort of trick I want to go through here. So what I'm going to do is I'm going to put the formula in, and then I'm going to explain what it's doing it. And conscious of time, and there's not much value in going through, I'm going to copy the formula in, because there's no point. So I'm going to open up the other file and just copy it in. So I'm just going to take it from here. It's something I did earlier. I've actually finished it, so I might as well just finish here. Let's make it bigger. I'm going to take this formula here. So I'm just going to go copy. And we'll just go back to the other file here and just paste it in. And if I copy that across, back. And before I get hung up on that formula, which looks pretty yucky in here, let's not worry about that and look at what happens if I put 0 in. If I put 0 in here, then the number of complete months before anything gets paid is 0, and the partial month is 0, which means, in other words, I invoice 100, I get paid 100, there's no. I invoice 200, I get paid 200, nothing owing. If I make this one complete period, so put 30 here, then the numbers, that 100 gets paid here, that 200 gets paid here, and so on. And this therefore works out what's the amount owing at the end of each period. And if I put 60 in, that's 2 complete periods, which is what this is doing. And then it goes 100 goes here, 200 goes here, and so on. That's what's going on. Right, now let's put 15 in. At that point, half of it gets paid now and half in the next period. So half of 100 is 50, that gets paid, and the rest gets paid in the next period. So all of that and half of that is 150, 100 gets paid here. All of that and half of that is 250, etc., etc. If I put 45 in, that's the same profile, just moved one period to the right. See, it's working. And this is the trade-off. In this version of the model, we're actually having to assume the same number of days in each period. Now, before you get any high and mighty, so I don't know about that. When was the last time your models were all calculated actually? This is the whole thing. We can go through. So how's this working? Well, what it's saying, I've got this error check again, if K19. So if this is 0, then we are going to do it. just going to put 0 in. So what's happening? This bit here, some offset, is saying, right, I want you to start in K27, which is the input, and I don't want you to move any rows or columns. Don't want you to move any rows or columns. Comma, comma, it's not the start of a culture club song. It's saying don't move any rows or columns. The depth is a value of 1, this height. So it's not going any rows. But then the actual group is the minimum of K19 and K24. Well, K19 is the month number, and K24 is going to be, sorry, it's the number of complete months, and K24 is the month number. So it's going to be the minimum of these two that it's going to say. So in the first period, if I make this 105, let's do that, so it's 3 months. It's going to say, when it gets to here, I want you with this thing to actually sum up those 3 periods. They're not going to go. That's what this is about here. So it's going to go K19 to N24. The minimum of those two is a minimum of 4, and 3 is 3. And it's saying, I want you to go and have a width of 3. Not going to move any. So it's going to be the 400, the 300, and the 200. None of those are getting paid. None of those being paid because it's 3 complete months that aren't paid. That's what that's doing. That's what the first part is doing. The second part is actually just saying, so what bit is being paid? So it's saying, right, so after the 3rd month, we need to go back 1 whole month. So what we're doing here is this offset here saying N27, don't move any rows, but go minus K19 rows to the left. Well, K19 is the number of complete months. So from here, it's going to go 3 months back. So 1, 2, 3 to the 300, and then it's going to multiply that by 50%. That's what it's actually doing. The reason we have this bit here is to stop it calculating back over here on these left cells. So if it's a case of if we'll be ending up referencing cells over here, that just stops it from working. So it's just saying, in other words, 2 parts. The first part is look at the number of complete months from here, which is so three complete months. None of this gets paid, so 700 plus 600 plus 500. And the partial month is going to be here, that is left, is going to be 50% of going back 1, 2, 3. So it's going to be 200. So we're going to be saying this one here, going back out, which cell was on? So this one. So it's the 2000 is calculated as these 3 numbers here, which is 700 plus 600 plus 500, which is going to be 1800, plus half of 400 is 2000. And that's how you get that number. Does that make sense to people? I'm conscious I'm trying to get through quite a bit in time here, but let me just check the chat and see if I've confused everyone. No, everyone's quiet. Well, you can have a play with that. So, so that's one way. The other way I'd like to finish on, and what I might do is I might just, conscious of the time, just look at this one. We'll go and have a look. So let's go and have a look at the other file for the second example. I'll go Control Home, because for some reason it's gone over to the side. Let's talk about how this one's working. So in here, another way of doing this, a more sophisticated one, is I've got my forecast sales revenue for my 12 periods, and I've got a cash receipt profile. So 40% gets paid in the first period, 25% in the second, and so on. If I add these up, well, that adds up to 95%. So 1 minus the sum of all these is 5%. So I've got a bad debt in this one. It's the first time I've considered bad debts because these are important, especially in the current environment for cash. And unless I'm going to write that off in month 6. So 5% of 100 is 5, and that will get written off in month 6, which is what's happening here. So I've used another offset formula to displace it. So if I change that to being, right, we'll do it in month 1, then this will just show it here. See, so I'm just using an offset period to get that going through. That gives me my first part. Then I've got my simple grid method for getting the rest. So in order to get the numbers to going down here, you can transpose, but I'm going to actually, and you can do that with dynamic array stuff, I'm going to use the offset function. And what I've done here, before I do this, is a little trick. This is just the numbers 1, 2, 3, 4, 5, 6. I've just actually go to format cells. You'll see if I go to the number in custom, I've cheated in here and made it look like it says sales period, when in fact it's just the number 6. That's all I've done. So this has got the numbers 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And the actual calculation I would put in here to get the formula going is right, equals offset. And I go to the cell to the left of, well, which is going to be this cell here, I14 with the absolute. I don't want to move any rows from that, so it's comma, comma. And it's going to be this number, F30. columns to the right. So that gives me 100, and I copy that down. And that will actually transpose the numbers, and sometimes I'll even copy it down to all the cells. Now this formula here is doing the same thing. It's saying, right, take this number now and multiply it by these percentages. But I'm using an offset to actually move it one bit. So forget this stuff here. Forget that. Let's just look at this bit here. Offset. J16, comma, 1 minus F30. It's going to be J16 is this 40%. And we're going to move it 1 minus F30 is going to be this period here, the count. So 1 minus $F30 is this period here. So it's going to say, right, I want you to move no rows down, but go 1 minus 1. 1 column, 1 minus 1 column cost is 0. So it's going to take that number and multiply it by 40%. In this period, it's going to take J16. Actually, let's look at this one. It's easier to say. K16, which is this 25, and it's going to go no rows down, but go 1 minus 2 columns across, which is going to be 1 minus 2 is minus 1. So it's going to move 1 column to the left from here to here. So it's moving it back 1. And suddenly it's going to go 1 minus 3, which is minus 2, to take this and go 2 back. Now, the reason we have this thing in here is so that we don't end up referencing numbers over to the left. It's just saying to stop it down. So this clearly, never mind if you don't understand the formula, it's taking 40 times 100 is 40, 25% times 20, 200 is, so 25% times 100 is 25, 15% times 100 is 15, and so on. And for this period, it's 40 times 200 is 80, 25 times 200 is 50, and so on. Then we can add it all up. And you think, Liam, this looks like a depreciation grid. You'd be absolutely right, because depreciation and working capital are two sides of the same coin. With depreciation, you spend all your money up front and you amortize it over time. With working capital adjustments, you're actually making the sale or creating the cost and either paying it at a later point or over periods of time, or receiving the money over a period of time, which is what I'm doing here, over a period of time. This is a lot like depreciation profile. And when you go like, that's actually quite good. So we've got this in here and it's calculating quite nicely. Now, it's worth actually figuring out how to actually get this next bit. So I might just knock this one out. The 100, the forecast sales revenue here, that's easy, but I might just knock this one out. So this 100, 200, 300 is just these numbers up here. But to get the reverse cash receipt profile, first of all, let me get these actual periods the other way around. So I'm going to go equals the max, open brackets, of this row here, minus that number here, plus 1. I need to just plus 1. And what that will do is have the effect of making the counter go backwards. 12, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. See? Why am I doing this? Well, now that I've done that, I can actually look up here and say, right, you see, in the first period to calculate this, it's going to be 100 times 40% gives me this. In the next period to get these two numbers, it's going to be 100 times 25 plus 200 times 40. 100 times 25, 200 times 40. In the third period to get these three numbers, it's going to be this number times that, this number times this, and this number times that. Now, if instead I got this going 300, 200, and 100, then it will be this number times this number times this, and this number times this. See that? And that's the SumProduct. That's what I'm going to do. I'm going to use a SumProduct function to get this out. So to get my numbers from here, I now need to get the right actual calculation, which is going to be okay. Take the index to go find it. Let me offset this time. Index, and go back up to my numbers here. G16 to U16, these numbers here, make those absolute. Close the bracket. I've got that number here. And what that's doing is putting those numbers the other way around. Index to, oh yeah, I've just I'll put a closed bracket in here. Shouldn't have done. Oops. Press enter. And what that will do when I copy this across is if I change that back to percentage, That's giving me my numbers in reverse order, percentages. And then to do my cash receipt, I'm just using a SumProduct. That's the thing I've done. So yeah, and what it's doing is the 40, so it's taking this number and multiplying it by this one. And then the second period, it's taking these two and SumProducting it by those two. And to do that, it's just a case of anchoring it. So how we do that is we go in here, SumProduct, let's do this from scratch, equals SumProduct, offset. Well, that's a nice autocomplete. That was supposed to be offset here, offset. And then we're going to start off in this cell over here, U48. We're going to anchor that because it's going to be that, but it's going to keep coming back. So we're not going to move it any rows, any columns, or any height. But the width, we want it to actually be going in here minus J46. So in the first period, that's going to give us just this number. In the second period, it'll give us these two. Then it'll give us those three. And then what we're going to do is multiply this by offset. I can't type anything, can I? Offset, open brackets. And now we're going to go to J49, this cell here, make that anchored. Again, we don't need to remove any rows, columns, or height. But the width is going to be, in this case, simply J46, because we're going to go the other way. Close brackets, and I'll copy that across. You will see it gives me exactly the same numbers as, wait, what if I got it right? What did I? Oh, I've made it J. Yet. If I had a brain, it'd be dangerous. Look at the time on here, 3:33. See, it's a bit early in mine. There we go. So we've got that 1035. All good with this? See how it's working? Nice and simple. So that's giving me the same way. So you can do it this way or that way, it's showing those. And it's just a case of putting the numbers in. The opening debtors is just the previous closing debtors value. The sales and period come from up here. The actual bad debts written off, we've calculated in this line already. And then the actual cash receipts I've generated this time are here, 4105. And then I put these in. So in this case, I have 1, 2, 3, 4, 5 items in my control account. So what would happen is going through, I'd ignore the opening debtors because it's previous period balance. I'd calculate the sales and period first, and that would go in the P&L. The bad debts written off would be an expense that goes in the P&L. The cash receipts would go as a positive number into the cash flow statement, and my closing debtors would be my accounts receivable in there. I don't know why it was hovering over that now. But that would be before calculations. And as usual, if I have no sales in period, I have no bad debts. If I have no sales in period and no bad debts, I have no cash receipts. And with none of those three, I won't have a closing debtor. So that's the order to do it in and sensitize this. That's it in a nutshell. Well, look, I'm sort of getting towards out of time here in terms of I want to make sure I've got questions. So I've just been showing you this wonderful chart, and this isn't always the appropriate method. So the calculation considerations, as I said, it's got to be credit times only. And if you've got unpredictable receipts or payments, then actually mirror when they come in. Monthly modelling of working capital will not allow for that easy method, and you'll have to look at methods 2 or 3, and do allow for bad and doubtful debts. And if you've got unbilled revenue, keep it out of the calculation. Simple as that. So the methods I've got, the closing balance method is all I've shown you, just put a closing balance if you know it. The average days receivable payable is the simple method. The percentage per month is another actual, so the average days receivable, the closing balance is the simple method, but I'm going back, sorry, brain dead here. The average days receivable payable was the second method where we assume 30 days in each period and use the offset to go full number of periods, a proportion of period. And then the percentage per month is actually 40% gets paid in the first month, 25% in the next month, and so on. An actual days receivable and payable is when you actually just use a formula and say this goes in this period, this goes in that period, which is often what happens with large infrastructure projects. And you just put the control accounts together. So as a wrap up, I'm going to, these are my contact details if you need it. Tim, my colleague, is based in Sydney. I'm in Melbourne. I'm going to show you just as a wrap up as well. I'm going to go to our website. So if I just go in here and click on SumProduct, our SumProduct website, SumProduct.com, I'll just put that in here. It's worth actually going to. I'm not trying to study anything because it's everything on here. So I'll just stay away from subscriptions. is free. We've got in here on the front page, we have a tip of the day. And then on the blog page, every day we have, and oh God, we're talking about Lambda today because we missed it out. We're going through the A to Z of Excel functions. On Mondays, we normally do the A to Z of Excel functions. On Tuesdays, we talk about Power Pivot. On Wednesdays, we do Power Query. On Thursday, Power BI. And on Fridays, we do a mixture. Sometimes it's VBA, sometimes it's charts and dashboards, sometimes it's A to Z. And on the final Friday of each month, next one will be the 31st of December, we have a challenge and we go through. So that's on here. We also have news items. I don't think there's been anything here for a while. There's a new Microsoft feedback portal and feature updates for Sheet View. But on the thoughts section, there's loads and loads and loads of topics on here, which we've written in the accounting press that it's worth. If you type on working capital, for instance, in here, capital, see there is my working capital adjustments in here. And you might recognize some of this. So you can, for notes for today, you've got it here if you actually want to see it. So I might just put that in the chat as well, so you can see, oh yeah, could have read that. But there's loads of other items like this and loads of freebie downloads. At the end and bottom of each page, just to highlight, if you're interested in this and you don't, I am normally a bit more animated, we've got a newsletter you can subscribe to. So if you just put that in and checking your spam as it checks, we have a monthly newsletter. Now, next monthly newsletter is about 50 pages long. It's crazy, we've been doing these for years. But these are things to go through. And if you want to look at old articles, so if I go in thought, we've got in here, for instance, the A to Z of Excel functions. If I click on that one, down in the B's, I've got Power Pivot, Power Query. So let's just look at the Power Query one, for instance. And then if I go down to the Visual Basic, for instance, there's lots of them, charts and dashboards as well. You can see this actually goes to the A to Z of Excel functions, where we do it a bit differently from the ones that are in Microsoft. And when Smitty was alive, we actually were co-writing some of these with Microsoft. Then we also have the Power Query blog series, which is loads and loads and loads and loads and loads and loads of those. And we've even got VBA ones, which are a bit more basic, going through just some tips. But I just thought I'd mention that. So if you want to play any more, I'll put my contact details in here. But hopefully you found this useful. So I might just put up on the wrap up my contact details again, in case anyone has any queries. Feel free to get in touch. But I'm happy to take this open to questions. Otherwise, hand back to Ilgar. So if there's any questions in chat, I'll just perhaps take those first. I'm just going to look to see if there are any. I've got a comment about people like the error check. I wanted to apologise again. Sorry, I was talking about an hour and a half, but I started 10 minutes late. Apologies. I'm not trying to blame them. I was sent the wrong link. And so I had to get imaginative and I had to register as an attendee. But I got here. I'm not getting up at this time of day and not getting here, let me tell you. So hopefully it's been useful. Just see if there are any questions in here. Got a thumbs up from Faraz at this point. I'd love to come to Azerbaijan at some point. I'm definitely going to try and come to the Formula One next year if COVID and my finances will allow me and also work. But I'm sure we will all cross at some point. So there's the Slovenian Excel Olympics. There was Bulgaria days, and we do as well. I'll just finish off. We've done it for this year, but there's Excel Virtually Global, which is an online thing. Last year we had 60 presenters, all for charity. You just donated what you wanted to, and it was online for a marathon, 60 hours. And the year before, I think we went even crazy. Thank you for those that are being nice and friendly here. It's all Faraz though. I think everybody else is hating me, but it's I'll be mispronouncing his name anyway, so thank you. There doesn't seem to be any questions coming through, so I might hand over to Ilgar.
Okay. First of all, I would like to thank you for your wonderful session. Really, I appreciate your contribution to the community because I know that really it's early time in your city. I'm sorry for this, but you did a great job. I'm very happy for this. And actually, I have taken one of your courses at goalskills.com, if I'm not mistaken. So yes, more stuff. I mean, more topics. I have already, had the necessary information regarding relate to these topics. So thank you for this. Actually, I have some questions, but I don't want to take your time. But however, I will ask
the questions. Let's go through.
Okay, so if briefly, please be so kind as talk about a little bit strategies for reducing errors. And also my second question is just what kind of tips and tricks should we follow to be successful in financial modeling win cup battles? I think you have the necessary.
I'll answer the second question first. In terms of the financial modelling working, you may have noticed I've been absent from that. I've not been involved. My colleague Tim Heng has, and I've noticed, but everyone's heard me all right, haven't they? Because I've been having my headset on, and I've realised it's all coming through my computer. So I think the audio has been going through the computer. Good, thank goodness for that, because it didn't seem to work. Can you still hear me all right now?
Yes, we can hear you. No problem. Yes.
No, so I'll put it in case it's in terms of the Financial Modelling World Cup. Now that's a different skill set, and it's about speed and trying to be logical. And I think Danielle Steinfair has said it's about speed of thought. My colleague Tim Heng, based in Sydney, another MVP, he's actually been co-hosting it, and you've seen him, Bill Jelen, and others on ESPN Esports. If you've seen that, it's a bit crazy, but I think it's just having a fast imagination and knowing your way around the common functions. I would say the top 12 functions to learn for those sorts of things. They're simple ones. I'm not talking about fact double and lambda and stuff like that. It's no inside out. If, sum, index, match, max, min, mod, offset, SumProduct, SumIf, SumIfs, they would be the key ones for this. Stay away from things like VLOOKUP and HLOOKUP, because I can break those. There are times they will not work, and they are well documented, but it's all about just going quickly. They're a bit of fun, but as someone that's been in financial modeling for many, many years, I found one of the people who did really, really well, we sat him down on a financial modelling test and he got 42%. He didn't do so well. So it's a case of, it's a different skill set, and it's a bit of a laugh as long as it's taken that way. But have a go at it. It's a bit of fun anyway, and do watch them, as I say, if nothing else, just to see Tim make a fool of himself. Going back to the error checks, just to go through. So what was it you wanted me to show exactly? I'll share my screen, but it's a case of, so in terms of how did I actually build it? So let me construct it. So the easiest one, let me talk. And now let's pretend I know how to use Office, and I'm going to just build something in Excel. So let's talk about error checks. And so if people have time, if people don't have time, there's basically 3 types of check you need to consider in a model. There's what we call an error check. There's what's called a sensitivity or a scenario. And then there's what's called an alert check. There's 3 types. So an error check is to check when something's wrong. Like you've got #0, #ref, #na, #brown, #pipe. Those sorts of errors. Something's wrong. Balance sheet doesn't balance. Cash and cash flow statement doesn't equal cash on the balance sheet. Something's wrong. And it's never about materiality. If it's 0.00001 out, it's still wrong. Because the beauty of Excel is you can change the numbers and it's suddenly $100 trillion out. So an error is an error is an error. A sensitivity or a scenario is when you're not in the base case and you're changing something. Say, warning, warning, you're not in the base case. And a good example I can give here is I was working with a very large mining company, BHP Billiton, years back, and they were looking at ways of trying to get more money back into Australia and pay as little tax. So they were like the forerunners of Google and Amazon, as they've tried to pay as little tax in different countries around the world themselves. And it's really, really complex. They use mix of companies and tax experts and goodness knows what. And you couldn't have worked it out on the back of an envelope. It was more complicated than that. And so they have, because they're a big company, they've got their own tax experts, they've got their own modelers, and they built this thing up. And they thought over 5 years, they could save around $20 million by doing this, which is not a significant amount of money, even with their large amounts of revenue. And the board, being very experienced, said, this sounds good, but let's get one of the big 4 to come in and check it. And I headed up the modelling team for one of the big 4. So I came in to check it, had a friend of mine doing tax stuff. I was charged with looking at the model. They were looking after the tax. And we noticed there were a couple of minor errors in the model, but overall it was working fine. But the trouble was they've been doing some sensitivity analysis and they hadn't got their numbers in the base case. And when we changed the numbers back to the base case, the saving went from plus 20 million to minus 70 million, 70. It was actually going to make a loss. Now, nobody got sacked, nothing happened. It was just people had forgotten this and they were happy to pay our fees. But this is a warning. be aware sometimes you're not in the base case, and that's why you need this check. And an alert check is just everything else. You've not got an error, you're in the base case, but you've breached your debt service covenants, you're insolvent, something like that. Those sorts of errors in here. So to highlight that, let me give a simple illustration with a balance sheet of how I put this together. So I'm going to put in here a simple balance sheet. I'm going to have current assets and something I'm often described as current liability. I can't spell anything now. So that should be total. You can tell the brain is rooted. Total, replace all, bang, there we go. Get it right, and that gives me my net assets. So I'll go here 100 minus 30, alt equals, thank you, second time it works, and that gives me my number here. And actually, I'll make that 30 so it's the two different ways. So it's because that's how you normally do it, equals that number minus that one. That gives me that. Then I have my shareholder equity here. I have my retained profits. And we'll go 50, 20, alt equals here. Format that. And we'll call that total equity. So very simple balance sheet. Just as an example for putting together some checks. Right, so you think first of all, the first check you'd want to do is that it balances. So you put in a balance check. And you might do that by writing equals that, equals this. And I'll just put over here equals formula text so you can see what's going on. C5 equals C9. But this gives you trues and falses. Now this is how PwC like to do, but I don't. I like this to be noughts and ones. So I'm going to force this to calculate by putting in brackets and then multiplying it by 1, because true times 1 is 1 and false times 1 is 0. So that gives me my actual 1. But I don't want to know when I've got things right. I don't want to know I've got 17,409 things working. I want to know I've got 2 errors. So rather than being equal to it, I'll put not equal to it. And then if this doesn't work, it triggers. That's what you want. You want to know you've got 1 error. That's what it is, putting this in. But the trouble is with Excel, when you put subtotals and things like this, because of how it works and converts everything using anti-logarithms and the fact it rounds to 15 significant figures, 17 significant figures, and so on, we might want to put a rounding thing in here. So we might say, okay, we'll round this. And typically what people do is they'll round this to about 5 decimal places, and so we'll put that in. So we'll put it like that. But if you think about it, I'm actually using 2 round functions here. I don't need 2 round functions. Why don't I just do C5 minus C9 without the open brackets, and then say that can't be equal to, if it's not equal to 0. That is the same thing, it's more elegant and shorter. And that will work fine. Now, if we think about this, I'll just copy this and put this over here. In a real model, this here would link to somewhere else. Now, the problem with error checks is, if somebody accidentally deletes this, I get a hash ref. And worse, my balance check actually hash refs out. So this is no good. So before we do this check, we need to do what's called a prima facie check. So a prima facie error check. And all I'm going to do here is go equals. Now, I don't want to use if error, because if I put in here, let me just put this from across. If I put here equals if error, and I'm going to take this minus, as long as I've got a combination of the 2 terms, I can add them, I can multiply them, it doesn't matter. So there's any error in here. And I put afterwards comma 1. Then what will happen here is it's going to give me an error. That works fine. But if I now make this a misbalance instead, the trouble is it gives me a value of 10, which is not what I want. So I can't use if error. I actually have to use if open brackets is error, which is the old fashioned way we used to do these things in the past. But not is error, is error. Put it in that way. And then I'll put this minus this. So if that's an error, so if is error, then I want it to be a 1. Otherwise, I want it to be a 0. So that that doesn't balance, but it's not an error, therefore it's 0. This one picks up the misbalance, that one puts it in there. See how it works? So we have to use that version. Now they're both fine. And we can put an alert check in here by saying if it's an insolvency check, saying okay, equals open brackets, if open brackets, the sum of these two is 0. So they have to be 0. Then you check this. You're not going to bother checking this if not, because it won't make any sense. But if they're equal to 0, then let's take one. It doesn't matter which, because they'll be equal, because going through, if it's less than 0, open brackets times 1, then y is 0. That will then give me my list of error checks in here. So I put this in here. I put 20. Now, if I put 4 divided by 0 in here, I get this, and this shows me, oops, I've got to put in here a check saying if open brackets this value is not 0, then 0, otherwise this. So I need to put an error track in. That fixes that. And then if this is actually 130, it doesn't balance. But if I make this instead minus 80, it does balance, but I'm insolvent. So these are the sorts of checks we can put in. And hopefully this gives you an idea. And what we do is we turn these into little flags. So I've got some formatting in here where what I've actually done on these things, if I put not that file, but the other file, I haven't got the other file open anymore. Let me just open it up again, the cash flow control accounts example. So I've got on here my little check. So I'm just going to take this for formatting. So just going to, I'm just going to take the formatted paper, and then we'll go here and put it in here and click on that. Okay, it needs to be a different color because I'm using a different color scheme on the other sheet. So never mind, let's put that in. Oops, and then we'll just format paint it down. So what I've actually done in here, let's make the fonts a bit bigger. This one as well. How I created these was I used Wingdings, and I went into here and went format cells, and I've actually used, for positive numbers I've used this symbol, for negative numbers I've used this symbol, and for 0 I've used this symbol. And I've had to go through Excel and Word to generate those symbols using Wingdings, and it generates these characters. And I put conditional formatting in to actually cause the error. So if I put that back to that, doesn't balance. Put this back to this, it does balance, everything's fine. So this is what I've got in here, and putting those through. And then what I've actually done is, these are periods. So let's insert some periods. Let me just insert, so we've got some here. Let's copy this a few times. So in here like that. So I've got this for different periods. Periods equals cell from F plus 1. And we'll just copy that across for a few periods. What I do to get my system going is I then actually sum these. So I'm going to say, okay, equals. So there's lots of ways you can do it. I'm going to say equals. You can take the max open brackets of the sum, so the minimum, I should say, the minimum of the sum of these, and 1 is one way of doing it. So that will give me a 1 or a 0. I'm just going to use the same formatting here. I'll just make it darker green and copy that down. And then here, I'm going to take equals the min open brackets of the sum, open brackets of these, those brackets, and 1. And again, we'll copy the formatting down and make it even darker green. So, we'll just keep going in here. And this is getting our check. So if I make this 30 so it doesn't balance, you can say that it will actually flag through and put our calculation, and then this gets recorded on a sheet. So what's actually happened, if I go back to our file here on this, is I've got these thing checks for, let's go to the balance sheet. Those checks I've just shown you. Well, there's my if is error 1, as I just showed you here. There's my actual rounding one, but I've actually used rounding accuracy because on the model parameters page, I've actually got rounding accuracy as a range name in here because I don't put hard code in a formula. So in here, and I've got an insolvency check as well, same things, and then I've summarized them. And each of these has been given a range name. So HL_BS_errors. HL stands for hyperlink. And then what I've done is on here, these are all hyperlinks. So if I click on this, it hyperlinks back to these in here and it builds up the check. So hopefully, I know it's a whistle stop tour, but that gives you a quick idea of how I built that. Does that make sense? I can't hear you at all now. I think you're on mute.
Yes, yes, yes. Now I hope you hear me. Okay, thank you once again. Really, I would like also to thank you once again. Okay, it was very nice, very wonderful session. So I see new people for the first time who participate in this talk session. For example, Tony De Jonker.
Hello, Tony.
Tony, I hope he hears us. So I don't want to take your time more. So last but not least, I kindly ask everybody who can turn on his or her camera. So I would like to take a picture, and then I will say goodbye to everybody, and I will also thank them for their participation. So at the end of each session, I'm just taking a photograph, I mean a picture. So I hope some people will turn on their camera, right? No, nobody wants, right? No, one girl. That's good. Concha Tarhan from Turkey. Oh, that's good. Okay, I hope so. Okay, it's better to yeah, Emil, and also so 4 cameras are open, which is good. Okay, so with your permission, I'm just going to take a picture.
Cheese.
Yeah, Faraz. Faraz is very professional. Okay.
They say cheese when you have your picture.
Yeah. Yes, I have already taken my picture.
No, you should call Liam, you know, you say Liam, and then you should take a picture.
Okay. Do it, please. Do it and take, you do it great, I know.
No, so everybody has to say Liam, you know. So
Okay.
like we will call Liam and we'll say
let's
Liam, and then we'll take a picture.
Okay.
Okay, so regarding, keep your camera ready. So so you have to unmute your mic and you have to say 1, 2, 3, Liam.
Liam. Okay.
It's official. We've all gone stir crazy in these lockdowns and COVID things.
Lovely.
Brilliant. So
Thanks for having me, Ilgo. And sorry about the misunderstanding.
no, it was my fault. I'm very sorry.
It's no big drama. We got there in the end. I was coming. I was always. See, I had to register as an attendee, but I got in the end. No worries.
Yeah.
Cheers. See ya.
If anybody has something to tell or to share, so you may do it. If not, I think it's time to say goodbye. So once again, by the way, I'm very sorry for wrong pronunciation your name. It's Liam, right?
Oh, don't worry. I mispronounce people. It's okay, Ilgar. I'm fine. I do it. That was a joke, by the way. It's not a big.
Yeah,
It's not a big deal.
one of say our co-hosts is okay. Also took picture. Let me have a look. Oh, it's a little bit different. Let me show you. I'm very sorry, and thus I will. Okay, and I will end. Okay. Let me show you. Yeah, he took in this way. Her picture. I mean, she took in this way. Her picture. That's good. Okay. So once again, thank you, Liam.
No worries.
I wait for you in Baku, right?
I'm going to try and come.
I hope you will come. And by the way, when is it going to be happen? In next year or in